Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Tuesday, it's the 24th of January. My name is Russell Shaw, I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. Encourage any emails if you guys need to contact me. That's the address to use. Just going to bring up our high risk investment warning. And as usual, I just want to go through the 3 yeses. Can you see the screen? Can you hear me? And can you see me on camera? Let me know. All right, got the 3 yeses. Fantastic. Thanks very much, guys. All right, let's bring up the market commentaries disclaimer. Just to give you an idea of what I want to do, I want to look at the COPOC indicator just to get an idea of the primary trend. Are we really in a bull market? And COPOC is a good indicator to consider. We'll look at a few of the indexes. I also want to take a look at the ARC Innovation Fund, which I haven't looked at. I'm very interested to see how it's responding to the current market bullishness. And then we'll take a look at the day trading layout, and we'll conclude around about there. For references, we'll use MarketScope and TradingView. So without any further delay, let's bring up TradingView. And I've got the DAX here. Now for the COPOC, we must use the monthly chart because we are looking for primary trends. And we've got a really nice looking signal here now. Because it's a monthly chart, we really want to take a look at this at the end of the month. But so we're a week early. Next week, Tuesday is the 31st. Anyways, you can see we've got a nice cross here. So let's just put that in. Okay, it's crossing its moving average up. Added the moving average. COPOC usually doesn't use the moving average. It just needs to turn up. But I think the 3-month moving average is a nice nuance, and it's below the all-important 0. So we've got a nice kick up here. So this is looking pretty good. Now the COPOC gives generally good signals, but it's not without whipsaws. So we just need to be cognizant of the fact that every once in a while it does give false signals. Let's just go through these previous signals. I'm putting in the 0 line just for our benefit. And if we go back to the tech, here's the tech rec. Here's the false signal. Okay, so there's a crossover here, and that was in 2002. End of 2001 into 2002. That's a false signal. So there, but following that, we've got some really nice turn-up signals. There's a nice one. COPOC's only used for entries, not for exits. There's a nice one. There's a nice one. So after the global financial crisis, nice signal. 2016, a nice signal. 2019, a nice signal. Now a little bit more choppy going into 2020, but of course that's when COVID hit, right? And then we hit a nice signal over here. Okay, now this one's a little bit late. The reason it's late is because we didn't really drop below 0 there. We just hit 0 and it turned up. But now we've got quite a deep crossover. It's looking pretty good. That's the DAX. I want to take a look at Dow Jones as well. All right, so the Dow, we are still looking for that all-important cross. Okay, let's just take a look at the signals here. Pretty close. We'll see what this looks like in a week's time. Okay, so we don't quite have a cross, but it's pretty close. In terms, by the way, just to be 100% in line with the theory of COPOC. COPOC doesn't use the crossover. That's something I've added in. It just needs to kick up from underneath 0. Well, we've got the kick up. You can see we've kicked up. I'm just waiting for the cross. So sort of an extra layer of precaution here. But in terms of the actual signal, we've got it. We just want to see if the 3-month gets crossed as well. Let's just go back, go through to the global financial crisis. No, we'll go back before. Let's go through to the tech wreck. So here again, the tech wreck. Here's the whipsaw, same as the whipsaw on the DAX. Nice turn up signal here after the global, a big one off the tech wreck. Nice turn up here. This is a beautiful signal after the global financial crisis. Beautiful signal here in 2016. And then on the COVID lockdown, it touches on zero, it's up. So also a bit late because we didn't have a deep movement there. But we've got a really interesting looking Copac here. Let's take a look at the Nasdaq. Nasdaq's super sensitive to interest rates, so this is going to be very interesting. Okay, so let's put in the zero here. All right, so we are still waiting for the turn here. So Nasdaq certainly lagging. Okay, I skipped out the S&P 500. I certainly want to look at that. Sorry, my system's just hanging a bit. Okay, so we don't have the kick up here. Again, if we go back to the tech wreck, so because the Nasdaq is actually a growth index, there's no whipsaw here. There's no whipsaw. Okay, it actually turns up. There's a delay, and then we move up. We go through to the global financial crisis. A nice signal there. I just want to put this on logarithmic. It's easier to see on the log. Okay, and then we only getting the next Copac signal. Now we're only looking at the Copac signal now. Yes, Raj. Sorry, we're looking at the S&P. Absolutely. All right, let's take a look at that. All right, let's throw in the zero line. Okay, you must have a zero line Copac. So the signals, the turn-ups for Copac are generally required under zero. If it turns up above zero, it's not a valid signal. Okay, here's the whipsaw. Again, we've seen that in Dow, we've seen that in DAX, we see it in S&P. We don't see it in the Nasdaq because the Nasdaq was that growth index. But then it does give us a nice, after the whipsaw gives us a beautiful signal following. Nice signal here after the global financial crisis, going to 2016, nice signal. Okay, and we just need the turn up as well. So let's just reiterate what we've seen. We've seen the DAX showing the relative strength at the moment. We've seen from the US side, we've seen the Dow Jones showing the relative strength. S&P and the Nasdaq are lagging. So the fact that DAX and Dow are showing the relative strength, well, those are value type of indexes. So it's the value companies that are really leading the way. That makes sense, by the way. At the beginning of bull markets, you'll see the value stocks leading, and then eventually we move into the growth stage. So I think that it's moving pretty much according to plan. I think we've got to look at the Russell 2000, which is a index on small caps. I'm going to use the ticker here, RUT. Okay, and this is very, very interesting here. We've got the kick up. Okay, we've got the kick up on the Russell. We're just waiting for it to see if it crosses. Now, there's something to say about this, but before we discuss further, let's just take a look at the other signals. Let's make this 0. And we'll go back to the tech wreck. Okay, now no whipsaw and it kicks up. Okay, why is that? Because it's also very much a sensitive index, typically it's the small companies that are going to lead the cycles. It's a small company that would lead out of a bear market, and it's the small companies that would lead into a bear market. So the fact of the matter is we're getting some relative strength on the small companies as well. Well, that's bullish. Okay, that's bullish. Okay, you can see that little bit of a whipsaw signal here, by the way. Okay, so you can see a whipsaw. Let's just put the whipsaw signal in. Whipsaw here as well. Again, just grounding us. It's just grounding us. Okay. So that's 2009. Thanks, Anna. Okay, so there's a whipsaw. I beg your pardon. There's a whipsaw here. Going back to tech rec. Whipsaw 2019. But then here's the nice turn up. So we've got a good track record here. We've just got to be cognizant of the fact that it's not infallible. The fact that it's turning up here, to me, is a bullish development. The small companies turning at the end of the bear market, well, ahead of generally the other parts of the market, except the value stocks, which is the Dow component. I think that, again, to me, is looking very, very positive. Is it a whipsaw? We don't know. We'll only know in a couple of months' time. But the fact that it's kicked up, I think that's positive for the time being. Positive until proven otherwise, right? All right, I want to take a look at the ARC Innovation Fund. I think it's ARQ. Let's just see. Let me try ARC Innovation. Sorry, ARKK. Let's take a look at that. Okay, let's put in the 0. Okay, so this is Kathy Wood's fund. She made a real name for herself because she picked the tech stocks during COVID lockdown, but she's also made a name for herself because she has been holding stocks into decline. So you would have made a real killing if you held into the apex, and then you would have made a real loss if you held thereafter. And we've got a parabola here, but it looks to me as if the ARC Innovation Fund is actually representing a fair amount of value at the moment. And you can see that the COPOC starting to cross as well. The caveat that we've got to state is this a whipsaw or not? Now, if it's a whipsaw, so be it. If it's not a whipsaw, okay, if it's not a whipsaw, then this is certainly one to keep an eye on. Certainly one to keep an eye on. We have seen the cryptocurrency starting to show strength. Just over the last 2 days, we've seen astounding moves on the NASDAQ. It's worth just keeping an eye on the COPOC to see if we do in fact get some sort of whipsaw signal here. Tesla's results are coming out this week. Let's take a look at Tesla, because Tesla's been absolutely hammered. So generally you want to use the COPOC on indexes, but just out of interest sake, if we apply it to Tesla, okay, which we can see is in some sort of distribution. Let's throw in the 0 line here. All right, and you can see that it's hitting value territory. It hasn't turned up. We're still in markdown phase on Tesla, okay, but we're certainly getting into that value territory. All right. Having said that, let's go into the day trading layout and see how the markets are looking just before the cash open. Okay, here's the DAX. All right, so okay, the DAX is pointing down. This is our fast stochastic over 5 days. Okay, it's pointing. So there does seem to be some stress or some pressure, some downwards pressure on DAX. Let's go through to the hourly. And you can see that the hourly is still in zone 1. We haven't got much to work with here, unfortunately. So we want to see the stochastic start pointing up, and we want to see price going to zone 1, upper red, upper blue. We want to see the fast stochastic and the hourly move above 50 as well. So a little bit of ambiguous signals here. So we're just going to pass on this one. Let's go through to Euro. All right, so this is interesting. Let's go through to the daily. All right, this one's a little clearer. You've got the fast stochastic pointing up. Okay, so this is the 5-day fast stochastic. Looking at percent K here. We go down to the hourly. All right, now this is interesting because we are in zone 1. We're in the upper blue, I beg your pardon, upper red, upper blue, and we are above 50. So this is all looking good. In fact, I've added an RSI. The RSI is above 50 as well. So we're getting all the boxes checked here. Incidentally, you're getting a squeeze on the Bollinger's as well. So it looks like there is a potential setup here for an expansion of volatility. If we do get that expansion of volatility and we stay in zone 1 and we stay above 50, okay, well then obviously we want to be looking to see if there's some sort of timing to the long side. So let's go down to the 5-minute. And here it's getting interesting. The momentum, this is a slow stochastic. The slow stochastic has lost momentum, but we're getting a pullback signal. I don't know, we're getting a pullback signal because the RSI here, this is an RSI 2, has dropped below 30. So we can start looking to see if we're getting a corrective 2-3. There's 1, 2, 2, 3, and potentially a movement up here. And if we get that movement up here, okay, we've got this squeeze on the Bollinger's. Now, I've gone through this very quickly, and if anybody's listening and they're thinking, well, you know, we're not following, well, that's because we've done this in a lot of detail, and we've got a whole playlist that's dedicated to the day trading layout. Just email me. I'll send you a link to the playlist. Okay, so we've just hit the cash open. You can see we're getting a potential 2-3 correction here, just as it's looking like it's going to expand. All right, so this is looking really interesting as we start the cash open. Just as a confirmation, let's go through to US dollar. Let's take a look what's happening here. And you can see the US dollar showing the mirror image to the euro. It's pointing down on the 5-day fast stochastic. We're in zone 3, lower blue, lower red. We're below 50. We're below 50 again, looking really, really good as a confirmation. And then we're getting the RSI starting to show signs of a correction. So that's the morning market review. If there's any questions, please go ahead and type those in. Any questions, please go ahead and type those through. All right, nothing coming through. If anybody needs access to the playlist, send me an email. That's rshaw@fxcm.com. And I want to wish everyone a good day, a good evening ahead. We'll talk tomorrow. Tomorrow we'll also have the crypto minute. All right, guys, going to sign off and speak to you all tomorrow. Cheers.